Hey guys, thank you so much for tuning into this week's episode of the Real Estate Talk Show, Homebuying 101 with Sebastian Cordoba, Mr. Clear to Close. Guys, this week I'm very excited because, we're going to be talking about real estate, but we're going to switch it up a little bit. We're going to be talking about the mortgage process. Yeah, that's right. What's the difference between a pre-qualification and a pre-approval, right? But also, another important topic is why should you not only focus on the purchase price, but also consider the monthly mortgage payment. That's gonna dictate your affordability, right guys? Aside from these beautiful topics, I have a very special guest. I have Francisco Valdez, who's also a loan officer with Guaranteed Rate, guys. So please like it, subscribe it, you cannot miss it. And guys, let's talk about some real estate. All right, guys, please, a big round of applause. Make some noise because I have a very special guest. I have Francisco Valdez, loan officer with Guaranteed Rate. Francisco, thank you so much for coming on today, brother.
A pleasure is all mine. Thank you for having me, Sebastian.
Yeah, man, I appreciate it. This is very important. I think, the knowledge that you and I can share and be able to give to our viewers is important, right?
Absolutely.
So, let's get into it. But before we get into it, Francisco, tell me a little bit about yourself. Tell me a little bit, how you got into the industry.
Yeah, of course. Again, Sebastian, thanks for having me here in your show. And let me tell you that I started actually about 15 years ago in banking. I started working for Wells Fargo. I was a credit analyst for Wells Fargo for a while. Then I started working in banks, and I started seeing other fields within the bank that actually will be, in my opinion, a good suit for my skills, social skills, and numbers. Started working as a loan officer about 6 years ago, and I haven't looked back since. I love what I do.
Awesome, man, and it's a beautiful piece putting families into their homes.
Absolutely, it's actually a really good experience, and it's a rewarding feeling when you actually help someone to be part of that dream of when you're part of their dream to be homeowners. It's a beautiful thing. That's
right. No, and it feels good to say thank you and you're welcome, and let's continue to help this family become financially independent and grow some wealth within real estate.
100%, 100%. It's nice and rewarding, like I said, being a big part of that.
Awesome.
Yeah, absolutely.
So Francisco, again, thanks for coming out, man. This is huge. I think there's a lot of important information, especially what's going on in the market. Interest rates are high, which we've seen a little bit of a dip. We see a lot of buyers out there, but the inventory is still short, right? But aside from that, let's get right into mortgages, right? So one topic that I think you and I really want to indulge into is pre-qualifications, right? What's the difference between a pre-qualification and a pre-approval? So please, Francisco, take the floor.
Yeah, absolutely. That's a great question, Sebastian. I think that is, as you know, in our field, we're asked that question a lot, not only from clients, but also realtors. Sometimes, especially new realtors that might not know the difference. So for everyone at home that is listening to us, tuning in, I'm going to tell you the very first thing that you will do when you talk to a loan officer as a client is that you're going to start 3 questions that I find the most common questions. How much money do I need to put down for the down payment? How much money in general, I have to have the down payment and closing costs, and what my monthly payment is going to be. That's a very, very specific question, and something that anybody who's into the home buying process will have. First time that I meet with a client, if I know that they're not feeling comfortable filling out an application because they're not ready, they don't know what they're doing, aside of telling them, suggesting for them to take a home buying class, I would tell them, we can sit down, grab a cup of coffee, and talk about the pre-qualification, which is basically without filling out a full application, they're going to tell me their numbers. What I mean by that, minimum payment on every liability, trade line also it's called, which is any auto loans, any home loans, any type of credit card, just a minimum payment, not the full balance.
Not the full balance. I was going to clear that up.
And that is very important because a lot of people think that it's the balance. No, it's just the minimum payment that we need. Now we're going to use that as part of our equation that, as you might know, it is going to give us a number called a debt-to-income ratio, a big part of the pre-qualification and the pre-approval process. Basically, pre-qualification is going to be anything the client, all the numbers the client is going to give us.
Verbally.
Verbally, exactly. There's no check-in, actually, credit score. We're not going to be doing any sort of application, nothing. It's just basically to have an idea, like an overall idea of how much they can afford if they move or when they move into the actual home buying process.
Got it. So just to recap, guys, pre-qualification is based on what the client or somebody who's looking to buy a property verbally states, whether it's their credit, their income, and their liabilities.
Correct.
Based off of these factors is what's going to help determine what type of affordability debt-to-income ratio you're in. Based off of other factors, we'll see what you can qualify up to.
Absolutely. You're absolutely correct. And the most important thing is that pre-qualification is really, nowadays, when the market is so competitive as we know, it really will come down to just a good feel for the customer, for the client, to have an idea of what they're doing. Because generally speaking, as you know, a realtor will not be able to show any houses without an actual pre-approval letter.
Right.
So the pre-approval is actually when you fill out an application, your client fills out an application, enter all the information, basic information. You are able to run their credit score and then work, as you know we do, full file, talking about like everything that has to do with income, assets, meaning, how much money, liquid assets they have to put down for the down payment and also for closing costs. That will issue after you review all that. Then we can issue a pre-approval letter.
Awesome.
Now with said letter, you can start looking at houses, contact your best realtor and start looking at houses.
Amazing, amazing. So the pre-approval goes more in depth, right? So what we're saying here, guys, is a pre-qualification is what, verbally what we're stating and what we're inputting and then doing the calculation on. But if we want to get in depth or we want to actually get into the official pre-approval where you can go shopping with a realtor and be officially pre-approved, yeah, we need to get a full application, like you said, Francisco. We need to get your credit score in, which pulls in your liabilities, right? With the documentation that we ask from you, like you said, taxes, W-2s, pay stubs, all these different documents is what we're going to determine, well, this is the income on paper that we have, right? So based off of the income, then we can figure out what's the maximum debt-to-income ratio you can afford, right?
That is correct.
Yes. So
yeah, absolutely.
Important. And I mean, it's very important because I know a lot of your clients or anybody who's listening out there who goes to an open house or reaches out to a realtor, what's the first question they always ask?
Pre-approval letter.
Have you been pre-approved?
Have you been pre-approved? Absolutely.
Right, yes.
And it's important because, like I said, in this market, it's very competitive, and we know that that pre-approval letter can set you apart. It's so important to understand. In my opinion, as a loan officer, one of my goals is to actually make sure that my clients understand the process, understand the numbers. I spend a lot of time actually explaining every single one of those numbers, so they're comfortable with the pre-approval letter.
Yes.
Now, real quick, just going back to the pre-approval and the steps that define that pre-approval letter. Something that I do all the time with my clients, I tell them and the realtors working with them that it's important to tell me where are they buying and the reason why. I don't know if you probably know, but the reason why is because
please tell me why.
One of the biggest numbers that sometimes people forget is the real estate taxes, and that's a big part of the pre-approval or the actual debt-to-income ratio. I'm sorry, of the pre-approval process, because we're gonna be looking at all the expenses and actually give you what we call an estimated monthly payment.
Okay, so
why is it estimated?
Yeah, so to get right into that, what consists of the estimated monthly payment?
So, exactly. So the estimated monthly payment are depending on how much money you're going to put down, but let's assume that somebody's putting less than 20% down, and we can explain later why. But let's say that someone, and this is important for all of you listeners, a lot of the time people mistakenly think that you have to put 20% down to buy a house. It's not, there's no such a thing. You can actually put as little as 3% down in some programs and buy a house.
Yes, that's correct.
So it's important to know that. Now, when it comes to what entails, if you put less than 20% down, you're going to have on the estimated monthly payment, you're going to have real estate taxes, which we'll definitely talk a little bit about it. We were just having that conversation the other day. And then you have the principal and interest, obviously, the paying back the loan, which entails, the principal and also the interest that is getting accrued. And you have the insurance, homeowner's insurance. That's super important, actually needed. You need that.
Yes, you do. And that's very important. So, so exactly. So the bank is always looking, to make sure that the house is secured, right? That it has insurance in case anything happens, it's secured. But you're absolutely right, Francisco. So what's very important in a monthly payment, which dictates the monthly payment and then the debt to income ratio, like you said, is the principal and interest, the homeowner's insurance, the taxes, right? And like you were talking about is, you can be looking at two different properties, right? With the same purchase price in two separate towns.
Correct.
Okay, same purchase price, and I can tell you, well, you know what, Francisco, you qualify for this one, but you don't qualify for that one.
Interesting. I love that you brought that up.
Yo, Sebastian, what happened? Why? You told me I qualify for this. Why?
I know. You know, it's so interesting. I love that you brought that up. I mean, we were talking about that the other day. Real estate tax is a big part of that. It's important to know that real estate taxes are different per town. Cities, they all have different real estate. I delve a little bit into it, and I'm going to tell you that in my experience, what makes a difference is usually what the town or city has to offer. The real estate taxes, when they're higher, you will see a great school system. You will see amenities. You'll see restaurants. You'll see a lot of things that actually are enticing.
Fire station, police
exactly.
station.
Safety. I mean, all those things that make a city or a town a great city or town is one of the reasons why real estate taxes in that town or city are going to be higher than others. Not all of it, but it's not necessarily all of it, but that's a big part of it. Another thing that could, and it's something that I tell my clients, if you really want to get into the difference between real estate taxes from town to town, look at what the new project in town is. For example, a hospital is something that a brand new hospital, that means that the real estate taxes are going to go up next year. Why? We all are going to benefit from it. Who's going to pay for it,
who
right?
pays for it?
Exactly. You know, money comes from somewhere, right? So we all, as part of, you know, of that city or town, we're going to have to pay for a brand new school in Worcester, where I live.
Yeah.
There's a new school being built.
Okay.
High school. My kids are probably going to go there in a few years.
Nice.
I can it's a beautiful state-of-the-art school.
Okay.
But you know, real estate taxes are going to go up a little bit.
Okay.
And we know that, but you know what? That's part of it. Why we want to live in that city.
That's right. And
amenities.
And it's going to benefit your kids, like you're saying.
Exactly. But to go even deeper into that, I have had definitely customers that have pre-approved for this amount, same amount, 2 different houses, like you said. And the real estate taxes are something that they did not account. I always tell my realtors and clients, listen, tell me before you go see a house, what is the property, so I can do my due diligence.
Yes.
I can run numbers and then give you the exact or very specific, very close to specific estimated monthly payment based on that house. That is going to be a big difference.
Exactly. And Francisco, that's a great topic because you know what? So that's on a single family home where we're looking at just the taxes and the insurance.
We're going to get into that.
You know, and then let's talk about, so let's say, for example, flood insurance, because that's another piece. So you can be looking at a property and, you know, that's closer to the coast. Now, it might have lower taxes, but the flood insurance isn't cheap, my friend.
That is a beautiful, oh my God, I love that you're bringing it up. You know what, I love that you're bringing that. It's something that I learned last year, actually. I was at a specific like home insurance seminar, and I learned a lot about flood zones. And one thing that I learned is that FEMA, which is the entity that regulates those flood zones, can move those. And actually they move those lines, not arbitrarily, but with the studies that they do, your house could be outside of the flood zone
1 year,
this year, and the next year it can be part of it. Now you're going to have to increase no, seriously, and the insurance company is going to tell you, if they're doing a good job, they're going to tell you, listen, you're not insured for flood, and now your house is within those lines. So what I do a lot of times is like seriously being proactive, as a good loan officer would, as you know. We're going to look at that property and see where the line is, and I will advise, because I'm not an home insurance agent, but it's part of my job to educate. And I tell the client, listen, it's good that if you talk to your insurance and tell them, like, listen, what if I get flood insurance now when it's not in those lines? This is a little deeper, I know, but you'll save a lot of money, because if you actually sign up for home flood insurance, even when you don't need it, knowing that maybe it's going to move up. I have a client that did it, and then the very next year, FEMA moved the lines.
Oh, no.
He lived next to Webster Lake.
Oh.
And now he's actually not paying. He's not paying that much because he signed up before when he was not.
Okay, so he took preventive measure, basically.
Exactly, and that's what I'm saying. It's just, I mean, it's so important, as you know, be part of a great team, a great realtor, a great loan officer, great homeowners. Insurance agent.
Yes.
You need to be part of
that. Exactly. So now, okay, talking about a single family. Now, before, we could keep talking about this,
We're excited about this. You know how it is.
Excited, So another piece is this. Let's say we keep those same variables. So we're looking at the same properties. Right. And let's say the taxes on this property are maybe they're the same. Okay, they're the same.
Right.
But we're also using rental income.
Right.
So now we're depending on, let's say, $2,000 of minimal rental income that we need to use from the other unit in order to buy this property, right? This is your property A with $2,000 of rental income, okay? Now we look at property B. this property B, same purchase price, same taxes, same insurance, but we're only receiving $1,800 in rental income, okay? Now, we're using less income that we were depending on here in order to qualify for that purchase price, which that can cause an issue, right? I mean, we're using less income.
Yeah, 100%. Rental income is pretty tricky, and how we determine rental income, or we look at it, you know, because in the end, underwriters are going to actually have the last word. But we know the guidelines, so we know that, you know, you absolutely can use that. It's a big topic.
It is.
I mean,
it is.
It is great to have it. I think that it's. I mean, I would advise anyone, if you have the opportunity to buy your first home as a multi, I would live in one unit and then rent the other ones.
Yeah, yeah.
I mean, I'm just here to, you know, get that. That's what I did. The first house was actually a multifamily, live in one floor and then rent the other 2 units.
Nice. Nice.
I mean, it's
you know, and the house starts paying itself off. You build some equity, and it's a real estate portfolio that you're trying to build, right?
100%.
So, you know, I think that we're also topping in the next topic that we're talking about, right?
Yeah.
So, touching on the next topic of, you know, let's focus on not so much the purchase price, but that monthly mortgage payment. So we've kind of already talked about it, where it's important, yes, to focus on the purchase price because it's going to give you a gauge and where you can look, but don't restrict yourself to only the purchase price, because you could find a property that's maybe priced at a little bit higher that has a lower monthly payment. You say,
Correct.
Sebastian, how? Well, yeah, the taxes are lower, the insurances are lower. There's different factors that can bring this monthly payment down. So, you know,
100%.
is this something you see a lot? I mean, what's the biggest kind of advice you want to say? Hey, you know, let's focus on the monthly payment. You know, let's understand that monthly payment, because, you know, us as lenders, we tell you what the maximum affordability is. This is the max. But at the end of the day, you guys have to decide how much you guys want to pay.
Exactly. I mean, that's a great topic, great subject that you brought just now, because I think that when I talk to customers, my customers, I always tell them, listen, one important thing that I need to know, one of my questions to you now is, how much do you want to pay per month? I can pre-approve you, and I remember my first house, I was pre-approved for way more than I wanted, because on paper, and we are actually following those guidelines, but on paper, we can afford more than we actually, if you're good with your finances, you can actually afford. And you know that 45% debt to income ratio on conventional loans, for example, do not tell the whole story.
Right.
We don't account in our liabilities. We don't account for cable, for phone bills, for things that do not appear on your credit score. So obviously you gotta be good at that individually. You gotta know how much you really can afford. But yeah, going back to your question about affordability, and you know how much we can afford, I tell everyone, be mindful of the fact that, you know, when I pre-approve you, I'm not looking at the whole. I don't know your finances.
Your other expenses,
exactly,
you go out to eat,
exactly.
Your phone bill.
Exactly. So I always keep it a little lower. I think that give a little bit wiggle room, just in case that happens. So for example, I have customers that get excited. They get it pre-approved. Let's say $500,000, right? And they see a house that they know that they could get it if they put 510, right? 510,000. Can they afford it? They can. I mean, like, and this is why I do it. So, but my most important question to them is always going to be how comfortable you feel with that monthly payment.
Yes.
Going back to your question. So that is, for me, that means more than how much you are pre-approved for, because I want my clients to first, like I said earlier, understand the numbers, feel comfortable with how much they can afford per month. And be able to, you know, like you said, go out and eat, and not just have to work to pay their mortgage.
Awesome.
For me, that is important.
That's huge.
That's how you build a good book of business, as they call it. People that will come back to you.
Because we're not focused on only this one transaction. We're thinking about the long-term growth of this person, and you're going to want them to refer your friends and your family because you did such a great job with them, right? So I think that goes to the next point, which is very important, Francisco, because this is the new mentality that loan officers, especially at least, you know, you and I, that we have the same mindset, is this is how we have to operate. There's always a conservative approach. There are different guidelines, and there are certain guidelines that we have to follow. So it's not back in the 07 and the 08 days where we didn't follow guidelines, or you can just sign here and verbally give your income. I mean, everything has to get regulated nowadays, so we're really putting you guys in the most financial, comfortable position to make sure you can repay this. You do have to qualify. It's not a matter of just, you know, verbally stating your income.
Exactly.
So you're protected,
yeah,
which is
absolutely.
good.
And I think, like you were saying just now, like I'm building that relationship with your client, not just honestly, not just so that they refer you to someone else, but also that they themselves can grow financially speaking, and they can maybe afford a second house later on, an investment property. You know, instead of just, like I said earlier, just working to pay their mortgage. That's not a nice way to go about in life, in my opinion.
I agree. Such a nice call to say, hey, Francisco, I'm ready to buy my next home.
Can you imagine? I love that. I love when clients do that. Absolutely.
Yes.
And what I was going to say, too, is that, in my opinion, is that one important thing is that, I said it before, but it was like surround yourself with a good team.
Yes.
So I'm talking about, like, you know, I always send my first email with the client is, do you have a realtor? If they do, perfect. What's their number? Let's just build a team. Let's talk so we are all on the same page. Do you have an insurance agent? Let's build that team right from the go. That is going to ensure the best opportunity to actually not only own the house of your dreams, but also understand
the full process.
Yes, the process, and feel comfortable with your monthly payments. You know, a lot of people that I've worked with before and they're bought with someone else, they did not know that the monthly payment could increase. Real estate taxes, as you know. Like we talked before, they can go up. They build a new hospital. Your real estate taxes are going to go up. Your fixed interest does not move.
Correct.
Your principal and interest are the same. Everything's the same except your real estate taxes that can go up.
Yes.
So it's important to understand those things. Very basic, but it's important to understand for our clients. So we have, you know, happy clients that will come back and keep working with us.
That's right. And that's the idea, is to put, you know, sustainable home ownership.
Exactly.
It makes a successful home ownership, you know, a part of an everyday type of business, right? So, Francisco, you know, this is huge. You know, all these viewers, I hope you've been taking notes because there's a lot of good information that we're shooting your way. But, you know, before we let these beautiful people go and these listeners and viewers, you know, what's the last piece of knowledge, last advice that you want to leave us with? But Francisco, more importantly, what's the best way that everybody can reach out to you?
So, that's a great two questions. So let me answer the first one first. The first advice I have for anyone even remotely thinking about buying a house eventually is this. Live within your means. Think about, are you comfortable with the monthly payment for rent right now? And try to make sure that you live, like if you already talked to a loan officer and did the pre-qualification or the pre-approval, and you see that you can afford a little bit more, before you move, try to save that extra as if you were paying for your mortgage for the next 2-3 months, whatever it takes to find a house, hopefully less, but so you feel comfortable making that payment. Like I said, live within your means and plan for the house that you want, for the monthly payment that you want.
Awesome.
That will be my best advice.
I love it.
For my clients. And how you can contact me, my name again, Francisco Valdez. My phone number is 508-934-9843.
Francisco, thank you so much, man. I appreciate it. You know,
my pleasure.
This was amazing. Yes,
absolutely. Always nice talking to you.
I appreciate it. And guys, I hope you guys appreciate, you know, all this good information we sent your way. Please don't hesitate to reach out with any questions. I appreciate you guys for tuning in. Please like it, subscribe it, share it, and I hope to see you guys next week. Thank you so much.